Hi guys, welcome back to my channel. If you are actually new to my channel, my name's Lynn. I am an overseas student from Vietnam who had the privilege to live and work in the UK for more than 10 years, actually probably approaching 11 years now. I did my pharmacy degree and I'm now working as a pharmacist, but I love learning, so I like to do this channel to share all the learning and experience that I have throughout my time of living and working in the UK. And in this year I've decided to take a gap year in order to give myself the headspace to study other interesting topics such as economy and personal finance, because I want to be able to avoid the default lifestyle of working 9 to 5 and only allow 28 days holiday, because I love learning and I love approaching with new material. So I thought, why don't I just record them, make them into video, so that people who are also interested in this topic can find having the option to pursue your dream, and so that you don't have to always stress about going to work. In this video today, I would like to share with you 5 principles in order to invest wisely in the next 10 years from my own research, and I hope you find them useful. And again, as a disclaimer, these are just all the changes that I have decided to have for my own portfolio to reach my retirement early. Actually, I'm not a qualified financial advisor. These are just all the changes I apply for myself, just for you guys to see what options available, so you can listen to it with a pinch of salt and knowing that these are the options available, but also do your own research. And if you are new to this investment world, then you can ask the financial advisor as well, or there are lots of blogs or books or the material that's available online, and you too can self-educate so that you can make an informed decision for a better future. I guess first thing first, I probably would like to explain the reason why I am so fascinated about investing and how to multiply the money and how to use the hard-earned money that we work hard for to benefit our future. So if you haven't watched my previous video when I talk about inflation and how it erodes our wealth over time, and that if we are just busy working and forget about how to invest our money wisely, we will end up being worse financial situation than the people do, and then we end up just having to live paycheck to paycheck, 9 to 5, or as statistics show that 50% of population are just working for the job because they have to, because they've got bills to pay for, not because they are passionate with what they do. Reflecting from my own experience when I was working full time, and I was just surrounded with people who are constantly complaining about their job, that they're doing their job because they have to. There was no passionate about patients' care. Probably we're just using your observation, and you will see that a group of people are surrounded us all. You can just see a certain individual are just like that. They just there because they have to. So, and I didn't want to be able to surround it with those people, and I know I want to be able to detach myself from that situation, so that I'm just going to work as a pharmacist that I am passionate about the role that I do, passionate about being able to share the expertise, the knowledge that I've gathered to support patient getting better, not because I have to be there, because I have bills to pay for, and I want to be able to achieve that financial freedom stage and just be there because I want to. And the second reason why I am so passionate about personal finance and investing is because I was raised in a family coming from Vietnam. My mom instilled in me, you have to work hard and you have to save the money in the bank and just live off the interest. But that advice from my mom is no longer relevant in this day and age. I just follow the same advice that my mom gave me, just to leave money in the bank and enjoying. At the moment, my saving account that I have for my emergency funds is giving me over 1% interest rate, while inflation is at this time of recording have reached 9%. So if you just do the math, I've already lost 8% in terms of the buying power for the money that I save in my saving account. And again, I only use that saving account for my emergency fund, which is the fund that I would have in the rainy day, just in case something happened that we need a chunk of money instantly, so I don't have to use my credit card. But then I want to use the knowledge and the experience, the learning that I have to maximize and invest wisely so that we can utilize the power of compounding. That if we started investing early, I don't want to have to wait until I'm 70 so that to enjoy my life. I want to be able to make my money work hard for me so that I can enjoy my life sooner than that. That's enough of the reason why I am passionate about personal finance and investing. Let's jump to the 5 principles that I have for you guys and that I have used to change my investment portfolio in the next 10 years. So principle number 1, just as I mentioned earlier, if you haven't watched my previous video about inflation and how it's eroded our wealth, how it acts as an invisible thief that eating away our wealth. There's a saying from billionaire hedge fund Ray Dalio, is a person that I really admired. His work, also sharing all the knowledge and learnings he had over the last 50 years, and you can find a lot of his books on Amazon and how popular they are, and all of the investing and the life lesson and all the principle, he called them principle, that he's sharing through all the books that he have written. He also have a website called economic.org where he's sharing all the paperwork that he have researched. So principle number 1 is forget about cash. Do not hold in cash. If you have the saving, then just have it for emergency fund only, and the only way to escape paycheck to paycheck lifestyle is to learn how to invest our money wisely. Principle number 2 is that you have to learn to take on debt responsibly. There are actually good debt and bad debt. So good debt is when, for example, if we are using our mortgage as an example, our interest rate was at 1.99%. It's really low. With the big mortgage that we took out to pay for our house, our mortgage was £270,000. 2 years ago when it took out the mortgage, £270,000 was a lot of money. But actually, we actually by the time that we finish up paying off the mortgage, that value of money will not be the same, will not be as much as that, while the asset is the house that will be increasing the value over time. There's a lot of sitting in the fence kind of debates when you thinking whether you should invest that money in stock market or you should owning a house. For my own opinion, I still like to be able to own my house, and I wanted to be able to enjoy the freedom that I have in my house, and I don't have to worry about whether the landlord's approving that or not. I know that I might be losing the money every single month to pay for my mortgage, but I know that with inflation that amount of money is eroded anyway, and I also have the freedom to be doing whatever I want with my house. So for me, mortgage is a good debt. What I consider a bad debt is those consumerism debt that we pay for to be able to own the newest gadgets, the newest iPhone or the fancy car, especially brand new car. I was nearly at the reach of like that lifestyle inflation when it get into me, and seeing that all my friends are buying their fancy car and I should sign up for the car leasing scheme coming off as my salary sacrificed, and how it will save the amount tax that I have to pay for, and I get to drive a brand new car. I'm so glad that I didn't commit to that leasing scheme because it's just a luxury. We all brainwashed that we need to be able to own those fancy cars to appear rich to everyone else around us so that they can look at us and think, Lindy's driving such a fancy car, she must be earning lots of money. And I'm so glad that I didn't commit to that. So as a rule of thumb, if we manage to borrow the money to invest into an asset that generates us the income every single month, then okay, yes, that's a good debt. But if we use that money to buy liabilities are those that taking money away from us and doesn't give it any beneficial at all, apart from what we tell ourselves that we need to have those just because we are brainwashed to have the lifestyle inflation. Principle number 3 is to avoid fixed income assets such as bonds that would use your money to loan for the government, and they would issue you a bond in return and they guarantee you an income, a regular income, and you also get that money back by the time that the bond mature. A friend of mine used to say that he invests his money buying premium bond, and with premium bonds I think you can actually get 1.4%. You also have the option to get a prize draw, and I think the ratio of this was about 20,000 to 1, so that's a chance of you winning that prize. So I would try to stay away from investing in bond. Principle number 4 is to invest in stock market boringly. At the moment I'm working 50 hours a week, so I don't have a lot of time to actually sit and pick individual stock. If I have more time later on, I would try to learn to read balance sheet and trying to be able to pick individual stocks. But right now I'm just investing my money in stock market using the index fund. I've invested my money in a life strategy with Vanguard, and it's an index fund that I manage to pay a lump sum amount of money every single month. It's investing over 4,000 companies, and it's like a league table that it selected the best performing company around the world. So if a certain company is not doing well, then again something else will balance it. And also is passive investing, so I don't have to worry about choosing them. What I need to do is to make sure that I pay myself first, and every time I get paid at the end of the month, that chunk of money is going to my Vanguard account, and I don't have to decide how much money I've got left at the end to invest on them. It's automatically done as the direct debit. And the final principle number 5, is that we need to learn to invest our money in a real asset. So real asset, such as you can become a buy-to-let investor, or you can invest in commodities such as gold, oil, natural gas, and you can also invest in infrastructure. You and I and people around the world are always going to need it. So if you haven't done so, then you can start looking into investing in those commodities. And I know that Legal in General also had an index fund or an ETF when you can investing on these commodities, so you don't have to buy individual companies such as BP or Shell. Again, it applies the same principle as the passive investing, and just investing on a portfolio of many companies instead of just picking 1 or 2. So these are the homework that I have for you guys. It's just a broad, like a quick stopover that I have all of the changes that I would have for my own portfolio. And that's, if you haven't thought about this, it's something for you to tingle with your brain and doing up research so that you can change it. Again, we're meant to look at our portfolio twice a year or 3 times a year. I like to recap on them yearly or twice a year, or whenever I decided to make any changes into our life, then I tend to look at them and just make appropriate changes so that we keep up to date with life. Again, if this is like you get your car MOT every single year, we also need to get our financial MOT. That's it. That's all for me today. It's just 5 principles that I have set for myself when I start revising over my portfolio, and what we should do to invest our money wisely so that it can overcome the inflation that's going to hit it very hardly. And the only way that we can succeed and we can escape the paycheck to paycheck lifestyle is just self-education, so we become more financial literate, so we can make our informed decision to invest our hard-earned money. And I hope you find this principle useful. I know if you are new to the investment world, and if there's a pharmacist that watching my video, we did learn about them at university. And again, if you are working full-time, I'm pretty sure that 90% of people you're working with are not really interested in this topic. Majority of my peers are not interested in, because they're just too busy with their own CPD, or we're too busy with focusing on getting our independent prescribing done, have our diploma done. I hope you find them useful. If you are new to this topic, then I hope this will give you an option. It will trigger your curiosity mind so you can explore on this topic further, and you too can make an informed decision. Again, these are just a principle that I have for myself. It suits my circumstances, but personal finance is personal. My circumstances might be different to yours. If you have learned even just one thing from my video, please like and subscribe to my channel. Again, if you find them useful, why don't you share it with your friends and family so that they too can make an informed decision for their financial life. Thank you very much again, and I look forward to see you in the next video. Take care and goodbye.